Invest Africa, proudly brought to you by KPMG.
Hello and welcome, and a very happy new year from myself and the Invest Africa team. Thank you for joining us once again in 2015. Now, as business for the year gears up, tonight we look at just what 2015 has in store for investment on the continent. Where does opportunity lie and where does danger lurk? Joining me to share their insights is Lulu Krugel. She is a KPMG senior economist. Craig Roberts, Middle East and Africa regional lead for DHL Supply Chain. And in Lagos, we're joined by Abiola Rasaki, is the head of research at Associated Discount House. Now, for you at home, if you'd like to be a part of this conversation, you can certainly do that. That's by keeping the conversation alive on Twitter, following me at Nozipumbandra or at CNBC Africa, and of course, using our hashtag InvestAfrica. Let's get right into it. Now, we've seen the African narrative changing from the hopeless continent to Africa rising in the past decade or so. Lulu, let's start off with what 2015 highlighted most for you about the African narrative and the investment landscape of this continent?
Well, I think one of the things that excited me as an economist the most is the level of diversification that we're seeing in African economies. That's something that we've been looking for a couple of years, and that's what we thought was necessary to, keep growth going and to really get the wealth of the investment getting to filter through to the rest of the continent and to the rest of the population living in African countries. So that's probably one of the key things that I think that's been a major change this year. We've seen a lot more focus on the less traditional sectors that we have seen development in the last few years, including services becoming very important, so as well as manufacturing, agro-processing. So a slow move away from mining and extraction and minerals and the telecommunications sector into other parts.
So the diversification story is what stood out for Lulu. Craig, let's get your key snapshot highlight of the year that's been.
I've just returned to Africa, but I think the thing for me is the stabilization. I think we're seeing a lot more stability around the economies. Governments seem a bit more stable than we traditionally had. So I think confidence is starting to grow. People are starting to look at Africa as a viable investment opportunity.
Abiola, let's get a view from the west of the continent. We've heard here in South Africa that the story of diversification and the story of diversity have been highlights for the 2014 year. What would have stood out from you from a Nigerian perspective?
Thank you very much. I think from a Nigerian perspective and the rest of West Africa, I think the key themes that we're looking out for is actually improvements in the education system, particularly that skilled labor is becoming very, very important if we're actually going to explore the opportunities that diversification brings to us as a continent. I think beyond education and the improvement in skilled labor that we do expect, I think we also need to also appreciate the continuous investment in infrastructure, which is also very, very important when you talk about service sector, when you talk about industrialization in Africa and particularly West African continent. So I do think our investment in infrastructure and of course improvements in the level of skills that people have got is very, very key for us as a continent.
Lulu, let's go back to the story of diversification that you've highlighted a couple of sectors. You've spoken about services, about manufacturing, about agro-processing. Going forward into 2015, from a policy perspective, what do you think is going to enable these sectors not only to be the new sectors on the block, but to really become big contributors to GDP of the various markets across the continent?
Well, I think the continued trade and growth in trade that we're seeing between African countries, us becoming more dependent on each other rather than on Europe and the US is an important story that will help that. But we shouldn't forget our traditional investment partners. There's always a lot of focus on China as well. And what is interesting is China is probably one of the most diversified investors in Africa. If you look at the spread of where they invest, and one would normally tend to think they focus a lot on mining. But be that as it may, it's important to make sure that we keep those ties with the UK, the US, Europe, the traditional trade partners going. And you know, there's a lot of bilateral agreements and things that are coming into place. It's important to implement those because there's at the last count there was about 70 different trade agreements and things going on in Africa. So it's important to get that sorted out. It's important to understand what's happening, and it's important to implement those agreements.
I think you've raised a lot of issues in that particular answer, so we're going to take bite-sized chunks of them. Craig, let's start off with China. We've seen slowing growth coming out of China. The data that's been coming out for it specifically in the 2014 year has pointed to a slowing economy. What does this mean for the African continent in 2015 and going forward?
I mean, even a slow China is fast by anybody else's standards, but I think China will continue to invest in Africa. They see it as one of their growth opportunities. So I don't think it'll change too much in terms of Africa. They'll keep doing what they've always done in Africa. They invested heavily in infrastructure, they'll keep doing that. So,
Abiola, slowing China is still good news, according to Craig. Let's talk about the Eurozone. Again, another traditional partner that Lulu has pointed out that we should continue to be trading with, but clearly not out of the woods in terms of economic recovery. Where do you see Africa's relations with the Eurozone going forward for 2015 and beyond?
I think the European economies will continue to look into Africa, particularly the investors who appreciate the growth opportunities that Africa presents. Beyond that, I think it's very important to also identify that beyond Europe and US, which typically are the traditional partners for Africa, I think the Asian continent also presents significant opportunities, just like she rightly mentioned. So I do think that, yes, Europe is currently still in the wood, but I still expect significant opportunity in terms of capital flows to Africa, particularly as most of the investors in Europe begin to look out for higher growth opportunities in the African continent. So in my view, yes, Europe is still having some challenges. There's still a couple of headwinds in there. But also don't forget the fact that the ECB has also given some level of respite in terms of accommodative monetary policies. So I do expect that this accommodative monetary policy would also push some investment into the African continent, and of course coupled with some expectations that we have on the back of the flows that we may be getting from the Asian continent as well. So in my view, I think post-election in Nigeria, for example, after elections in 2015, we should see stronger foreign direct investment flows into Africa, particularly Nigeria.
Absolutely, and again, lots of issues raised by Abiola. We're going to be looking at this trend of a divergent global monetary policy. But before we do that, Lulu raised an issue around intra-Africa trade, and I want to bring this back to you, Craig. We've seen very big pledges and investment towards infrastructure build on the African continent in the year of 2015, both 2014 rather, both from African players as well as our international partners. 2015, what is it going to take to move forward from the pledges and really begin to see infrastructure connecting the various markets on the continent?
I think it's probably the one thing that's holding back Africa is actually the lack of infrastructure. I mean, all our customers complain about lead times into Africa, and that's really because of the lack of infrastructure. I think if you look at consumers in Africa, they have access to the internet, they see what the current products are, but when they look on shelf, they're seeing stuff that's 4 or 5 months old. And I think that's what's hampering growth in Africa. So we have to really step up the investment in infrastructure. Without it, we're not going to see Africa rise to where Asia is, which is what we all want to see.
We heard a lot about the narrative around public-private partnerships in 2014 as the answer to getting a lot of these huge infrastructure projects off the ground. Do you think that this is the path of consolidation that should be taken into 2015 going forward, or what should governments be doing to actually get past some of the bottlenecks that you've highlighted?
I think honestly we've got to do whatever it takes. At this point we desperately need it, and if we can find a model that works, we simply have to do it. There's no alternative.
I want to stay on the infrastructure point, and I want to go to Abiola as well, because I think there's lots of convergences between South Africa and Nigeria in this regard. Infrastructure in South Africa, let's talk about economic infrastructure, power in particular. 2014 was a difficult year, especially towards the end for South Africans, not only households, but we're also talking businesses here. What, in your view, did this reveal about the policy environment in the country, about the leadership in the country? And of course, we know that it's going to have implications for foreign direct investment going forward.
Yeah. I think one of the main concerns is coordination, planning, making sure that the right people are involved in projects at the right time, making sure that once there's bottlenecks, it gets sorted out quickly. One of the things that hit us really hard in South Africa, of course, is labour relations, and that has had knock-on effects in a whole range of different infrastructure projects. You mentioned PPPs, and ironically in South Africa we had mixed results with PPPs, to be quite honest. The spending in terms of PPP projects lagged behind schedule, and I think very often it's because the different parties that are involved don't necessarily have the same view of where they're going, and the coordination is just not there.
Let's get the Nigerian experience. So a mixed bag of results in terms of public-private partnerships on the South African landscape, Abiola. But have PPPs been the solution for infrastructure development in Nigeria? And what do you think should be done as a follow-up question in 2015 and going forward to really begin to address economic infrastructure deficits?
I think the situation is also very similar to that of South Africa and Nigeria. It's been a mixed bag. For example, we've had a situation where a particular PPP project was actually dragged down because the private sector has really not performed on its own expectations. However, we've also seen some success stories in Nigeria with respect to PPP. So I think it's neither here nor there. But I think the most important thing is for each party to recognize its role and to actually play its own part. Beyond that, I think the government needs to be more transparent with respect to PPP projects and, of course, further encourage the private sector in investing in the infrastructure sector. For example, you may have been aware that just in December 2014, the federal government of Nigeria actually granted a tax holiday to investors who are interested in the infrastructure sector for as much as 5 to 7 years. So I think this form of incentives are also very important to actually make infrastructure projects commercially viable, particularly in a country like Nigeria where you have a lot of uncertainties. So I do think the government needs to provide more incentives. I think the government needs to de-risk some of these infrastructural sectors, which I think it's very important so that at least the private investors can be more attracted to all these infrastructural opportunities that we've seen in Nigeria and the rest of West Africa. So I do think incentives are very important. I do think transparency is important. I think the government also needs to play less role in terms of economic activities and just guiding by way of reforms and, of course, concessions.
A smaller role for government, more pronounced incentives, as well as increased transparency. That's some of the insight that we've gotten from Abiola Rasach. Unfortunately, that's all the time we have for him. We're going to be connecting with Nairobi after the break, but a very big thank you to Abiola. He is, of course, the head of research at Associate Discount House. It's time for us here in Johannesburg to take a quick break, but when we come back, we give you more on what the 2015 investment trends in Africa are likely to look like. Don't go away. Welcome back to Invest Africa. Tonight we're looking forward at 2015 investment trends. Remember that we do value your suggestions and your feedback, so please send us an email. That's to investafrica@abn360.com, or talk to us on Twitter, following me at Nozi Pombanjwa or at CNBC Africa. And don't forget to use the hashtag Invest Africa. Still with me, my guests, Lulu Krugel, KPMG Senior Economist, Craig Roberts, Middle East and Africa Regional Lead for DHL Supply Chain, and joining us now from Nairobi, we have Julian Zamboko. He is a research analyst at Stratlink Global. Maybe let's start off in Nairobi. And Julian, before the break, we were looking at some of the key highlights for the year in terms of the investment landscape. We spoke about the continent once being dubbed a hopeless continent, and slowly we began to see the narrative of an Africa rising. How would you describe what we've seen in the eastern part of the continent in 2014?
Thank you very much. I think in 2014, the economy has been particularly resilient on the whole because we have challenges of terrorism and Ebola that is in West and East Africa. But the general trend has been one of buoyancy. And I think overall, I would say it's been a bullish year.
It's been a bullish year in East Africa, but let's tackle those two issues that have been raised. Craig, let's start off with terrorism. We've seen both sides, east and west of the continent, coming under the spotlight, under terror attacks. I won't ask you whether there'll be more in 2015, but what I will ask you is to reflect on the responses that we saw from the various governments and whether this gives you confidence looking forward into 2015 that we have a handle on the situation.
I mean, the event's always tragic, but the thing that concerns me is sometimes the overreaction overseas. You know, if you look at the incidents, they're generally quite small, quite spread away from major centres, whereas if you look at the press overseas, it sounds like, you know, downtown Nairobi is in flames almost. And you know, we have seen major terrorist events, but some of the other stuff is quite widespread and quite diverse. And to me, the biggest concern is the reaction overseas. You know, every time something happens, you know, markets react, investment slows down, which is a real problem for us.
I want to go back to Julian's and maybe just get you responding to that comment made by Craig that it might not be as bad as it's made out to be, in particular by international media. You're on the ground. You've seen the impact that terrorism has had on the tourism sector in Kenya as a very specific example. Let's get your sense of whether you feel that you're confident going to 2015 that the responses are robust and that the government is even more prepared to make sure that they can adequately respond should there be any further attacks.
I think the first thing to point out is that the economy has fared very well in terms of Q1, for the Kenyan case, Q1 and Q2 growth. We've had 4.1 and 5.8% respectively, which tells you that the underlying fundamentals have been really supportive. But in terms of government response, I want to believe that the government takes cognizance of the fact that tourism is a very vital sector in this economy, and that going into 2015, it will step up the measures it has been taking.
Lulu, let's talk about Ebola. We had some good news in 2014 with countries like Nigeria managing to manage the crisis. And we had the international community slowly, as well as African leaders, slowly waking up to the crisis that this epidemic really has become. What do you think this showed about the state of our healthcare system and the responsiveness of our leaders to such crises? And you get a sense that as we stand now in 2015, that this is not going to be a significant threat to further investment?
Well, to also link with what Craig has said, I think initially there might have been a little bit of an overreaction, you know, with a lot of people cancelling all travel to Africa and really, you know, not realising that it's been very specific areas that's been hit by Ebola. Having said that, yes, both the international world and African leadership has stepped up. I think if I think about some of the articles that we saw in the middle of last year in magazines such as The Economist and Time and so on, describing where we could have been by now and where we are, we realize it's two completely different worlds, and we realize that we actually did pretty well in terms of containing this, and governments actually responded with fairly limited resources in certain economies, responded quite well to get this under control.
One of the issues that was raised very early on, Julian's, was the diversification of African economies. I want us to go back to the commodity story on the continent, where we're seeing discoveries almost on the monthly basis, and in particular in East Africa as well. But this has been largely against a backdrop of falling commodity prices. In light of that, what do you think 2015 has in store?
I think the critical thing to point out is that majority of the economies, especially in the East African sector, in the East African economy rather, are well diversified. We have a very strong service sector, which are basically the ones supporting the growth. In terms of the discoveries being found, certainly the trend in commodity prices sends us back to the drawing table in terms of what the outlook could be like. But I think on the whole, the economy is well diversified in the case like Kenya and Tanzania to weather such kind of shocks in terms terms of prices.
Craig, falling commodity prices weren't all bad news in 2014. The falling oil price, for one, must have been good news for people who are in the business such as DHL. Did you see the cost of business coming down on the back of the tumble in the oil price we saw towards the end of the year in 2014?
Well, it happened pretty late in the year, but generally, if costs come down for us, they come down for our customers and they come down for consumers. So I think generally across the continent, falling oil prices are good news for consumers in general.
Do you see good business in the year coming ahead? Because if we look at the statement that was made by Morgan Stanley and their predictions for the oil price, they're expecting those prices to be quite low going forward. Although, of course, OPEC has pitched the price recovering back to $110 a barrel. Should it stay subdued, are you, one, anticipating a very profitable year, but which markets is DHL likely to be going into that perhaps weren't on your radar in 2014?
I think in terms of our strategies, they're generally quite long term. I don't think we're going to change strategy based on an oil price moving slightly. I think we're across Africa anyway. We're in most of the countries anyway. So I don't think our strategy is going to change based on a short-term movement in commodity prices.
So no changes in the DHL strategy. We're hoping for a story there to run for 2015. But let's talk currencies, Lulu. One of the currencies on the African landscape that raised a lot of eyebrows, of course, was in Ghana, and we saw a free fall in that regard. Somewhat stability came back, but overall, what do you think the currency landscape is likely to look like for African markets in 2015?
Well, I think for as long as we see volatility and uncertainty in the global economy, investors are going to be sensitive to changes. It's not always fair. You look at the African continent, and if you look at growth, investors should actually be looking favorably at Africa, but unfortunately that's not the way that investor psyche work. So as long as there's mixed news coming from the US, mixed news coming from the UK, we can expect to continue to see some relative currency volatility. At least things are looking better there, so yes.
Things are looking better. Julian, let's maybe just touch base on the trend of divergence that we're seeing in global monetary policy. There have been analysts in 2014 who were expecting that rate hikes in the US would come as early as June and July. We know that all eyes have been on the Eurozone and whether quantitative easing was going to come to the fore in that regard. And we've seen even Asian economies, in particular Japan, going ahead with the QE. Where does this leave a market like Kenya, where you have this divergence in global monetary policy?
Sorry, do you mind just bringing the question again?
Where does, in an environment where you have a divergence in global monetary policy, the US unwinding quantitative easing, the Eurozone bringing QE, where does this leave, or rather, what does this mean for a market like Kenya?
I think in terms of the trends in global monetary policy and the divergence that we've been seeing, we have seen also domestically in Kenya, in Uganda, in Rwanda as well, there's been a bit of monetary easing. The Kenyan Central Bank retained the benchmark rate at 8.5%. Rwanda slashed it sometime in June, and so did Uganda, in essence seeking to catalyze domestic consumption by increasing credit access to the economies. So I think in that context, they are trying to ensure that domestic consumption is shored up higher.
We've only got a few minutes left, and before you go, I want to start off in Nairobi and just get a sense from you, Julian. What do you think the 2015 year has in store? If you could capture in a few lines how you think the 2015 narrative for East Africa and in particular for Kenya is going to read.
I think for 2015, what we must appreciate is that two of Africa's most populous economies will be having their elections, that is Nigeria and Ethiopia. The two have also been sterling performers in terms of economic growth. So it will be very critical to see how that affects their investment and economic performance.
Well, on that note, that's all we have time for tonight. A very big thank you to my guests for sharing their insights. Please do remember to send us your comments. The details are on your screen. From myself and the Invest Africa team, Happy New Year, and it's goodbye until next time.